Everyone, you're watching HMJ Study channel. In this video, we'll go for 12th Commerce Accounts, problem number 5, chapter 1, Introduction to Partnership and Partnership Final Account. You can refer the links given in description for the other solutions of the same chapter. So let's start. Here is the question given on page number 58. First of all, what is given in question? It is mentioned that you are required to prepare trading and profit and loss account for the year end 31st March 2019. And also, Sucheta and Gayatri are the partners sharing profits and losses in the ratio 3:2. So it is clear that their profit sharing ratio is 3:2. We will keep in mind their profit sharing ratio is 3:2. So, in this way, we will prepare the account. Here is our trading and profit and loss account with the debits and credit sides. In the books of Sucheta's and Gayatri, trading and profit and loss account for the year end 31st March 2019 with debit and credit sides. You can see these are the closing lines. It means trading and profit and loss account can be divided with this closing lines. The upper account will be trading account and here it is profit and loss account. And this is all our balance sheet carrying liability and asset side. So in this way you will prepare the accounts. Let's start with the usually steps. The first step to mark out the adjustments. The adjustments are given here. First is stock on 31st March means closing stock that we don't mark. The second is goods distributed as free sample. Third, motive power includes 500 as deposit. So mark the motive power here. It is here. Single mark. Depreciation on building. Mark out the building. Next is write off bad debts and maintain RDD on debtors. Bad debts is not given in question. We will mark out the debtors here. But here you can see debtors and creditors are given together. So mark the debtors with the debtors amounts 47,500. The last is bills receivable include dishonoured of bill rupees 4,000. So adjustment on bills receivable and it also affects the debtors. So therefore second mark for debtors and we'll mark out bills receivables too. Here is my bills receivable, so I'll mark it up here. So we have completed with the first step. In this way you will mark out the items here. The next is to transfer the items from trial balances to the respective accounts. I have written here for you. Purchases and sales. Debit balance 65,000 for purchases. Trading account debit side in the inner column, as we know that purchase less purchase return we write. So in the inner column, sales trading account credit side in the inner column carrying 1,85,500. Inner column as we deduct sales return out of it. Next is work manager's salary, trading account debit side. Capital Sucheta's and Gayatri. We goes to the balance sheet liability side in the inner column. As we also go here in the capital balance of Sucheta and Gayatri, we add net profit in this. Next is opening stock trading account debit side. Here the debtors and creditors are given together. First we'll go for debtors. Balance sheet asset side in the inner column. As we know debtors carries 2 of the adjustments, so we will leave 4 to 5 lines for it. Creditors balance sheet liability side 35,000. Next is wages and salaries. Wages is the first word. It is direct expense, so trading account debit side. Bills receivables balance sheet asset side in the inner column as it carries adjustment. Next is bills payable balance sheet liability side. Discount carries credit balance, therefore profit and loss account credit side. Next is motive power trading account debit side. It carries adjustment, so the amount will be written in the inner column. Custom duty trading account debit side. Interest, it carries again credit balance, therefore profit and loss account credit side. Unproductive wages Profit and loss account debit side. It is unproductive wages. Therefore, profit and loss account debit. Audit fees, profit and loss debit. Rent, profit and loss debit. Conveyance, profit and loss debit. Goodwill is nothing but asset. So, balance sheet asset side. Copyright, balance sheet asset side. Buildings, balance sheet asset side in the inner column as it carries adjustment. The next is partners. Suchita's loan. Loan, it is loan, therefore balance sheet asset side, but we'll write the amount in the inner column as it is hidden adjustment. Investment, balance sheet asset side, cash at bank, balance sheet asset side. So, in this way, you will transfer all the items which we just discussed. Now, what else we have done here? We did purchases 65,000. We wrote in the inner column as we deduct purchase return, but we did not got any purchase return in the question. So, we will take the amount outside. The same for sales. Means 1,85,500 will come as sales in the outer column and 65 as purchases in the outer column. The next step is to solve the adjustment. First is about closing stock. Stock on 31st March 2019 was valued 19,700. Trading account, credit side by closing stock 19,700. Balance sheet asset side, closing stock 19,700. Here you can see trading account credit side we have written by closing stock 19,700 and balance sheet asset side closing stock 19,700. We'll go for second adjustment. Goods costing rupees 3,000 distributed as free sample. First effect, trading account credit side writing buy goods distributed as free samples 3,000. Second effect, profit and loss account debit side writing 2 advertisement expenses 3,000. So, here we have written buy goods distributed as free samples trading account credit side and profit and loss account debit side 2 advertisement expenses in bracket goods distributed as free samples 3,000. The third adjustment is about motive power included 500 rupees paid for the deposit of power meter. So, this is deposit paid. So, motive power we wrote in trading account. So, we will deduct this 500 from trading accounts motive power balance, and this 500 is nothing but asset as it is deposit. So, asset side of balance sheet deposit motive power meter 500 rupees. Here you can see trading account debit side we already was having 1350 in the inner column as motive power less deposit for power meter 500, and after deduction we got 850 in the outer column. It is nothing but asset, therefore deposit power meter 500 in the asset side. The fourth adjustment is regarding depreciation on building at 5%. We already are having buildings in the asset side. Here you can see. So, building amount was 88,000 and depreciate building 5% means 5% of 88,000. This is our 88,000. 88,000's 5%. How much you will get? This two zeros will be cancelled. 880 into 5. 880 into 5 you will get 4,400 as your depreciation amount. So, what to do with this 4,400? Less depreciation 4,400. So, after deduction, take the amount outside, you will get 83600 in the outer column. 83600. This was the first effect. The second effect, profit and loss account debit side 2 depreciation on building rupees 4,400. The depreciation amount you will write here. You can see this here. Building was written 88 less depreciation 4,400, 83600 in the outer column. Next effect, profit and loss account debit side 2 depreciation on building 4,400. We'll go for 5th and 6th adjustments together as it affects togetherly. You can see here 5th adjustment, write off 2000 rupees for bad debts and maintain RDD 3% on debtors. So this 2000 is bad debts and it is given in adjustment, therefore new bad debts. RDD 3% on debtors, new RDD. And 6th adjustment says bills receivables includes dishonoured of bill rupees 4000. Bill is dishonoured. Bills receivable we are having already in the balance sheet asset side. So this dishonoured bill will be deducted from bills receivable. We already have written 22,000 as bills receivable in the inner column. We will deduct this bill dishonoured from this 22,000, and the amount of dishonoured of bill is 4,000. So therefore in the inner column 4,000. Deduct this amount, take it to the outer column, you will get 18,000 in the outer column. What to do with this 4,000 bill dishonoured? This bill dishonoured will be added to the debtors as it affects indirectly to the debtors. It increases the balance of debtors. So add bill dishonoured. We already are having 47,500 the amount of debtors. So from this in this 47,500, this 4,000 bill dishonoured amount will be added, 4,000. You will get in the inner column only 51,500. That's it about adjustment 6. We'll go for adjustment 5 now. Write off 2,000 as bad debts. This is new bad debts. What we do with this new bad debt? And we are also having RDD 3% on debtors. So what we do with this new bad debts? We deducted from debtors. So less new, this is new bad debts. Less new bad debts. The amount is already given as rupees 2,000. So deduct this 2,000 from 51,500. You will get 49,500 in the inner column only. Again, RDD 3% on debtors. Now, how much we got as debtors? We got 49,500 as debtors. So, 49,500 3%. It is written here RDD 3% on debtors. Therefore, on this amount 49,500 will calculate 3% debtors. So 49,500's 3%. Again 2 zeros cancel. 495 into 3. So 495 into 3 you will get 1485. This is our new RDD. 1485. What we do with this new RDD? This new RDD is deducted here. Less new RDD. The amount we got is 1485. This 1485 will be deducted from 49,500. You will get amount in the outer column 85,015. The second effect of this new bad debts and new RDD. What we do? We are having to the debit side of profit and loss account. We don't have written because we did not got bad debts in the question. Therefore, we will write all the steps together. 2 bad debts, add new bad debts, add new RDD and less old RDD. So, 2 bad debts we don't have in the question. So, less nil amount of bad debts. New bad debts. We got new bad debts here as 2,000. So, right in front of new bad debts 2,000 rupees. New RDD, we already have got new RDD as 1485. So, right in front 1485. Take the total of it. How much you will get? You will get 3,485. 3,485. Old RDD was not given in question. So, again put dash in front of it and take the amount in the outer column. So, 3,485 only will come in the inner column. This is all done. Here you can see bad debtors amount was written, we have added bill dishonoured amount, we have deducted new bad debt, we have also deducted new RDD. The second effect of this all bad debts and RDD we wrote in the debit side of profit and loss account, and we got 3485 as the final amount of bad debts. We also have affected this bills receivables here. Okay, so that's it about fifth and sixth adjustment. Now all the adjustments are done, only the hidden adjustment is left. Here you can see hidden adjustment in the question. Partners Sucheta's loan account, partner Sucheta's loan rupees 6150. Sucheta's loan, it means the interest is outstanding on 6150. So Sucheta's loan we already have written to the liability side. We will add Sucheta's loan in the liability side, but the amount will be something different. Okay, we will calculate the low interest on loan. So the amount of Sucheta's loan was 6150. Therefore on 6150, here no rate of interest is given, therefore we will consider it for 6%. The rate we will consider for half year, that is for for 6% we will consider it, and it will be for calculated 0 cancel 0 cancel, 5 2s are 10, 5 1s are 5, 5 2s are 10, 5 3s are 15. Now 1 2 3 multiply by 6, that is 369 rupees. So this is the amount of outstanding interest on Sucheta's loans, 369. What to do with this 369? We will add to the Sucheta's loan in the liability side, we will add the amount of 369, and then we will transfer it to the debit of profit and loss account to outstanding interest on Sucheta's loan. Here you can see it is mentioned here. To the liability side we were having Sucheta's loan balance, we have added outstanding interest on loan 369, and second effect, to the debit side of profit and loss account to outstanding interest on Sucheta's loan, and the amount of interest we will write here, that is 369 rupees. Now all the things are done, we will close down the accounts. First we will close trading account. We know that these are our closing lines, means upper side of it is a trading account. Check all the balances are there in the outside or not, and then take the total of credit side, take the total of debit side. The total of credit side is 2,08,200 and the total of debit side is 92,350 rupees. Now you better know the credit side is greater, therefore write the total of credit side in the credit closing column, 2,08,200 and 200 rupees. Transfer the same amount here in the closing of debit, 2,08,200. Now take the difference of it. How much you will get? You will get 1,15,850. This is nothing but our gross profit. So it is written here upside 1,15,850, writing 2 gross profit. This gross profit is transferred to the opposite side of next account. Our next account is profit and loss account. So after closing lines to the credit side of profit and loss account, here we will write by gross profit and the amount of gross profit in the outer column, that is 1,15,850. All this you can see here. The total is written here, it is transferred here. The balance we have written upside and we name it as to gross profit carried down. We have transferred this gross profit to the opposite side of next account, that is credit side of profit and loss account, writing by gross profit brought down and the amount of gross profit in the outer column. The next is to close down profit and loss account. Profit and loss account starts after closing lines, means from here. So take the total of credit side, take the total of debit side. The total of credit side is 1,17,550. This is the total of credit side. Take the total of debit side, it is nothing but 20,554. 20,554. Now again the credit side is greater, therefore write the total of credit side in the closings. Write the same in the closing of debit side. Find out the difference of it. The difference you will get is 96,996, which is nothing but net profit. Where we write this net profit? We write it here, writing to net profit. Now this net profit is distributed among two of the partners. Our partners' names were Sucheta and Gayatri, and our profit sharing ratio was 3:2. So how to distribute this 96,996? Amount is 96,996 and our ratio was 3:2. Therefore 3/5, the total of 3 and 2. This will be for Sucheta and the next is Gayatri. Again the same amount, 96,996 into 2/5, the second share. How much you will get? You will get it as 58,198 for the first one, 58,198, and for the Gayatri you will get 38,798. So this will be written here in the inner column. See how. Here you can see the net profit. The total was written here, it is transferred to the opposite side. The balance you got it here, 96,996, which is called as net profit, and this net profit is distributed among two of the partners. Look at the way how to write it down. Okay, so this was the closing of profit and loss account. What to do with this net profit? Net profit is added to partners' capital balance to the liability side of balance sheet. In the balance sheet, we left out two of the lines here after Sucheta's capital. Why have we left it out? We have left it for the drawings and net profit. Here in the questions, no drawings. So net profit will be added. In Sucheta's capital, you will add net profit. What was the amount of Sucheta? It was 58,198. So write it in the inner column, 58,198. Take the total outside, you will get 1,33,198. Write it proper in the outer column. Go for the Gayatri's capital, add net profit. What is the amount of Gayatri's net profit? It is 38,798. Take the total outside, it will be 78,798. Write it properly. So it is transferred. Net profit is added to the Sucheta's and Gayatri's capital respectively in the liability side of balance sheet. You can see here. In this way we will add it and will take the amount outside. Now again the closing of balance sheet. Balance sheet always tallies. Take the total of asset side, take the total of liability side. It will be tallied with the amount 2,80,815. Here to 2,80,815. You will present it in this way. our balance sheet will be tallied in this way. So the whole solution of problem 5 will be in this way with some working notes. Okay, that's it about this problem. We will meet soon with the next problem. Thank you.